You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday, 29th day of June, 2023. And being a Thursday, that means tonight is our members-only workshop. 8 p.m. Eastern. Guys and ladies, when you come, have your questions ready, okay? And if you've been on the trial and you've decided you want to become a lifetime member, today's a great day to do that, because then you'll get an invitation to be in the members-only workshop tonight. Now, we do 2 live broadcasts every trading day. First live broadcast is private. It's for members and trial members only. It's our live training room, and it runs from 9:30 a.m. Eastern to 11:30 a.m. Eastern. If you've not yet taken your 1-week free trial, just go to mytradingiq.com, click the button at the top of the page, the one that says 5-day free trial, and the journey begins. Now, it doesn't matter what day of the week or weekend or hour of the day that you sign up for the trial, you will still get 5 trading days with unfettered access to every resource our lifetime members have access to at no cost to you. That's right, no credit card required. We actually invest our time, our energy, and our resources in you for 5 consecutive trading days. So with no pressure whatsoever, at the end of the 5 days, you can make a well-informed and intelligent decision as to whether or not trading is even right for you and if what we do is right for you. So it's a pretty good deal. I checked. Now, when the live training room ends every morning, every trading day at 11:30 a.m. Eastern, we take a whopping 30-minute break and come back for the afternoon broadcast. This one that starts at 12 noon Eastern, and this one, unlike the first one, is open to the public. That's everybody, everywhere, planet Earth, with an internet-connected device. Now, the best way to join the broadcast live, go to mytradingiq.com. Scroll down to where it says Afternoon Broadcast. Click the link, complete the 30-second registration form, and you're done. What will happen going forward, every trading day, about an hour before the afternoon broadcast starts, you'll get an email. So at 12 noon Eastern, all you have to do is open the email, click the link, and it will automatically log you into our platform. Now, I call that the better way because that gives you access to the question box, so you can ask questions and participate in the discussion. Now, there's going to be days when you're out of the office, away from your desktop, but you still want to join the broadcast live. We have a solution for that. And there'll be days that you're just busy and you can't join live, but you would like to hear and see everything that happened later. A day later, a week later, doesn't matter. You see, not only do we broadcast live on our YouTube channel every trading day, we also archive each and every daily broadcast. Currently, there's over 2,200 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's actually a great way to get to know who we really are. Not just today, not just this week. You can scroll back a month, 6 months, a year, 2 years, even more. Just pick some days at random. You don't even have to listen to the whole broadcast, but at least fast forward to the part where Michael's doing the recap of the live training room. Fast forward to the part where I'm doing the recap of the Logic 247 alerts and the concierge trade alerts. If you will do that, you'll quickly see that there's a thread of connectivity, a thread of continuity woven through each and every daily broadcast. So all you got to remember is youtube.com/CFRN. In fact, you already know the youtube.com part, so really all you got to remember is /CFRN. Okay? All right. Let's get rolling. Now, here's how it works. We open every day with a devotion and a prayer. Then I share with you the numbers from around the world. And then we talk about the topic of today's broadcast. Those of you that are tuned in via the YouTube channel right now, live, you already know the title of today's broadcast. How much does it cost to learn how to trade? Well, after our devotion and our prayer, and after I give you the numbers from around the world, we're going to talk about that for a minute. Then we'll get into the actual recap of the Logic 247 alerts, the concierge trade alerts. Then 45 minutes into the broadcast, Michael will join us. He'll give us a recap of what happened this morning in the live training room. Then we'll go live on the TradingView platform for 30 minutes, do 30 minutes of live trading, just like we do every morning in the live training room for 2 hours. And then when we're done on the TradingView platform, I will come back. I will announce our winner of the tweet of the day, and then I will complete the recap of the Logic and concierge trade alerts. So, let's go. Now, our topic this week is wisdom, something we all need and hopefully want. The scripture, 1 Corinthians chapter 1, verses 20 through 30. And I'm going to be sharing from the Message translation. The message that points to Christ on the cross seems like sheer silliness to those hell-bent on destruction. But for those on the way of salvation, it makes perfect sense. This is the way God works, and most powerfully, as it turns out. It's written, I'll turn conventional wisdom on its head. I'll expose so-called experts as shams. So, where can you find someone truly wise, truly educated, truly intelligent in this day and age? Hasn't God exposed it all as pretentious nonsense? Since the world in all its fancy wisdom never had a clue when it came to knowing God, God in his wisdom took delight in using what the world considered stupid, preaching of all things, to bring those who trust him into the way of salvation. While Jews clamor for miraculous demonstrations and Greeks go in for philosophical wisdom, we go right on proclaiming Christ, the crucified. Jews treat this like an anti-miracle, and Greeks just pass it off as absurd. But to us, who are personally called by God himself, both Jews and Greeks, Christ is God's ultimate miracle and wisdom, all wrapped up in one. Human wisdom is so cheap, so impotent, next to the seeming absurdity of God. Human strength can't even begin to compete with God's weakness. Take a good look, friends, at who you were when you got called into this life. I don't see many of the brightest and the best among you. Not many influential, not many from high society families. Isn't it obvious that God deliberately chose men and women that the culture overlooks and exploits and abuses? Chose these nobodies to expose the hollow pretensions of the somebodies. That makes it quite clear that none of you can get by with blowing your own horn before God. Everything that we have, right thinking and right living, a clean slate and a fresh start, comes from God by way of Jesus Christ. That's why we have the saying, if you're going to blow a horn, blow a trumpet for God. So, as I said, our topic this week is wisdom. Now, where's the last place you would expect to gain wisdom? From humility, perhaps. But you see, wisdom is packaged with humility. It's an intricate part of humility. Humility contains an enormous amount of valued content. Indeed, wisdom is one of its highly revered resources. If you want wisdom, you will appropriate humility into your heart. Humility delivers wisdom as a chauffeur delivers his client. Wisdom travels with humility. In some ways, wisdom takes a back seat to humility. The humble understand their need for the wisdom of God. Gone is the pretense of a self-appointed guru who thinks he already knows everything. Humility is crystal clear in its need for Christ's thoughts to intersect its intelligence. Humility is smart enough to confess what it does not know. Too much of life is beyond the reach of human reason. There has to be more than man's comprehension. We are not objective enough to figure out the best choice with our own limited understanding. We need the wisdom of God to wash our thinking and leave his righteous residue. Humility positions us to receive wisdom from God and others. It is a growth process. Even Jesus grew in wisdom. Luke 2:52. Pride pushes you out of position to receive wisdom. It's like a first baseman in a baseball lining up in left field. He is out of position once the ball is hit. No one is on first base to receive the ball. Without humility, you are out of position to receive wisdom. You may even desire wisdom, but without humility, you will be sorely lacking in heavenly instruction. God rarely imparts his wisdom to a proud person because he knows he cannot be trusted. Why entrust such valuable information to one who will squander it or spend it all on oneself? God knows the humble in heart will be a good steward of wisdom. Indeed, humility places in the heart a hunger for wisdom. It stirs up an appetite for wisdom's morsels. Once you adjust your spiritual diet to consume wisdom, you'll never go back to the junk food of worldly wisdom. The world's wisdom is positioned in pride. It is a power struggle over who can be the shrewdest and the quickest to outsmart their opponent. Everything is competition to the proud. He foolishly jockeys for position through his own power. The humble, on the other hand, are patient and wait on God. There is a depth of diligence and determination that accompanies wisdom born out of humble trust in God. Disgrace is the traveling partner of pride. Pride may get you what you want, but only with a wake of disgrace in your rearview mirror. Better to be humble and follow the ways of wisdom. Wisdom allows you to rest well. Wisdom gives grace. Wisdom gets results with no regrets. So humbly invite and welcome in gracious wisdom of God. Join me in a word of prayer. Heavenly Father, we come before you today, acknowledging your infinite wisdom and sovereignty. As we reflect on the words of the Apostle Paul in 1 Corinthians, we are reminded of the profound truth that your ways surpass the wisdom of the world. You have chosen to confound the wisdom of the wise and the intelligence of the intelligent. In a world consumed by knowledge and human understanding, we find solace in knowing that your divine plan transcends our limited comprehension. Today, Lord, we ask that you help us to embrace the message of the cross, which may seem foolish to the world, but is the power of salvation to those who believe. Father, we ask that you open our eyes to see the beauty and majesty of the gospel, which reveals your unfathomable love and grace. In a society that values success, wealth, and human achievements, remind us that true wisdom comes from you alone. We ask that you strip away our pride and self-reliance, and that we may begin to depend wholly on your guidance and seek your will above all else. We ask, Father, that you would grant us a heart of humility, for it is in our weakness that your strength is made perfect. Teach us to boast only in you, for you are the source of our righteousness, redemption, and sanctification. Help us to find joy and contentment in knowing you and experiencing your presence. Guide us in our pursuit of wisdom, that we may discern truth from falsehood and navigate the complexities of life with clarity and discernment. May your Holy Spirit be our counselor and guide, illuminating our minds and hearts with your divine wisdom. As we walk in this world, may we be a testament to your power and grace, shining the light of Christ in the midst of darkness. Use us as vessels of your wisdom, that others may come to know you and be transformed by your love. In all things, may your name be glorified, for you are the ultimate source of wisdom and understanding. Right now, we surrender our minds and hearts to you, trusting that you will lead us in paths of righteousness and guide us into all truth. It's in Jesus' name we believe and pray. And everybody said, Amen. Well, happy Thursday. I hope it is a happy Thursday for you, wherever you are and wherever you are. Let me give you the numbers from around the world. I'm going to start here in the U.S. with the cash markets, or the indices as they're called. Currently the Dow up 276 points, just shy of 1%. NASDAQ up 3 points. S&P 500 up 17 points. The Russell 2000 also up 17 points. In the commodity basket, crude oil up 24 cents, trading 69.80 last. Gold down $5.70, trading 19.16 last. Silver down 29 cents, trading 22.78 last. That's a drop of over 1.25%. In the Asian markets at the close, the Nikkei posted a gain of 40 points. The Shanghai dropped 7. The Hang Seng fell 237. And that's 1.25%. And in the European markets at the close, FTSE down 28. DAX down 2. The CAC up 26. Been some pretty quiet, thin trade in the European markets all week, really. So at the close in Asia, we had a mixed market, the Nikkei being in the green, the other two in the red. In the European markets at the close, again, a mixed session. FTSE and DAX both in the red, CAC in the green. And so far, it's a big green radio Thursday here in the US of A, with all 4 of the major indices the same color. As futures traders, we don't really care if they're all 4 red or all 4 green, because as futures traders, we're free to trade in either direction. We can be long, short, long again, all in the same hour, if that's what the chart in front of us tells us to do. But it is on the days when the four major indices, the S&P, the Dow, the Russell, and the NQ, are all the same color, green or red, that we find some of our best high probability, low risk trade opportunities. It's when we see more follow through than on the days when the major indices are mixed. Now, the NASDAQ is only positive by 5 points. So this thing could turn around on us here. If not during this broadcast, possibly later in the day, or when the Friday session opens tonight at 6 p.m. Eastern. It will be the Thursday session until 5 p.m. Eastern. Then the Globex markets will close for 1 hour. Then tonight at 6 p.m. Eastern here in the U.S., the Globex markets will reopen, and that is the beginning of the Friday session, right up through the close of the week tomorrow at 5 p.m. Eastern. Now, what does it cost to learn how to trade? Well, I'm sure you've checked out a number of places, and the ones that you want to be really careful with are the ones that don't just straight up tell you what it costs. In fact, one of the biggest of the biggest, the one with, and I'm not going to call names, I'm not into that, but you've most likely seen their late night infomercials, which you no longer see because the FTC got pretty upset over some of the claims that were made and complaints that were filed with them. That's why we don't promise you anything other than we will teach you what we know, and we will share all the tools that we have with you, and that you'll have lifetime access to everything we do, everything we've ever done, and whatever we do in the future. The cost of the CFRN Passport, which is lifetime access, no recurring fees, no upsells ever, is $5,000. To be exact, $49.97. Okay? Now, the company I was just referring to with the infomercials, they didn't have a fixed price. Their strategy was to figure out how much disposable cash you had. And some people paid $10,000 for the very same training that other people paid $50,000 for. The way it worked is when you went to the free luncheon that was put on in your city, if you live in a major city, you would fill out an application where you would list your assets. Home, what's the value? How much do you have in savings? How much do you have in your checking account? I mean, they came just shy of asking you for your social security number. Now, was this to see if you qualified to join their program? Well, yes and no. Really, what it was used for was to determine at what price point they were going to try and sell you their training based upon the amount of income that you had. We have members right now. Some paid $10,000, some paid $50,000 for the same stuff. Shameful. Seems like it should be illegal. Oh, wait, it was. The FTC put a stop to it. So, you got to be very careful. Now, the average cost to hire a professional trader for teaching and mentoring can vary significantly depending upon any number of factors and the scope of the mentoring program. Again, our mentoring program is lifetime. There's no fine print. Once you take the trial at our expense and then make a well-informed, intelligent decision if trading is right for you and if what we do is right for you, you pay once, $5,000, and that's it. Membership for life. Now, in this industry, some companies pop up one day and disappear the next. By the grace of God, we've been around since 2005. That's something you want to look at when you're looking for someone to teach you how to trade. Are they brand new on the scene? Have they been around for a while? You have to ask these important questions. Some professional traders offer online courses or group mentorship programs that may seem more affordable up front, but you gotta look for the fine print. What's the ongoing cost? Personalized one-on-one mentoring with an experienced trader typically commands much higher fees. 20 grand, 30 grand, 40 grand, 50 grand. Makes our 5 grand look like a drop in the bucket. But those sums of money that I just mentioned that you pay to this quote-unquote professional trader, that's for a limited period of time. Our members have lifetime access not only to our live training room for 2 hours a day, but unlimited one-on-one mentoring sessions and around-the-clock support via our Telegram app. You can make a well-informed and intelligent decision. And we give you access to our Telegram discussion group so that you can actually mix and mingle and ask questions of our current traders. Folks just like you who once stood in your shoes, perhaps bewildered by the complexity of it all, or having been burned time after time after time. Most of these chat rooms and message boards, everyone's got a chip on their shoulder. They're mad, and in many cases, rightly so, because they've been lied to, swindled, and taken advantage of. Again, that's why we give you 5 days with unfettered access to every resource our lifetime members have access to, and an opportunity to speak with our current traders via the Telegram discussion group. Now, let me go back to pricing. A lot of groups, there is no transparency in pricing, and that's essential. Prospective traders should seek mentors who provide clear explanations of their fees up front, including any additional charges or ongoing subscription fees that may be applicable. With the CFRN Passport, It's lifetime membership, no recurring fees, no upsells, and no nonsense. Ultimately, cost of hiring a professional trader to actually teach you how to trade can vary significantly. So do your shopping, ask the tough questions, and if anyone wants your money before they're willing to give you a free trial, well, that should be the first red flag. Now, if you've already taken the trial and you're ready to become a lifetime member with no recurring fees and no upsells and no nonsense ever, you've probably already received an email with a link, or you can go right here to eminifuturestrading.com. Couple mouse clicks, friend for life. If you have questions, call Valerie at 949-42-EMINI or send an email to support@cfrn.net. Everything we do is transparent. Not only our pricing. We trade live in front of you for 2 hours every trading day so that you can learn how to do exactly what we do. We want you to become self-sufficient. And I would hope that you would want to become self-sufficient. You don't want to depend on somebody else to tell you when to get in and when to get out for the rest of your life. You want to grow to a point where you can look at a chart, see the window of opportunity, and then know exactly how to enter that window of opportunity, manage the trade, and exit at the appropriate time. Our alerts, the Logic 247 alerts and the Concierge Trade alerts, those come out to our members and trial members well before they trigger. Now, the Logic 247 alert channel has over 14,500 individual handcrafted alerts. Every one of them is a trend trade. Not that there's anything wrong with counter trend trading, but I think you'll find you're better served learning to trade with the trend as opposed to against the trend. Once you master trading with the trend, then you very well may want to explore counter trend trading. And when you reach that point, because you have access to unlimited one-on-one mentoring sessions, I'll teach you. There's no gotchas, no parlor tricks, no circus acts, no smoke and mirrors. If you've not taken the trial, go to mytradingiq.com and click that button right at the top of the page. Again, it doesn't matter what day of the week or weekend or hour of the day, you will get 5 consecutive trading days, even if it stretches over a weekend or even a holiday. Reminder, we have a holiday coming up Tuesday, 4th of July. And be careful with those fireworks. You can get hurt, and we don't want that. So, Michael will be joining us in just a couple minutes. So what we're going to do is take a look at the daily chart. Now you might think, I don't trade the S&P. Okay. And I don't trade a daily chart. Okay. I do trade the S&P, but I don't trade the daily chart, but I use the daily chart to give me very important information so that when I go to my smaller time frame 30-minute charts, I have a pretty good idea which way the wind is blowing. Now, tomorrow will make 2 weeks since this high was put in. It's not an all-time historic high. We were in a downtrend for over a year. The low was put in October 13th of last year. And 2 weeks ago, come tomorrow, this is the most recent swing high. Now you're looking at fib retracements. That's where you expect the market to find support. These are fib extensions. This is where you expect the market to potentially find resistance. So we consolidated at the 24 for quite a few days. Then we found resistance at the 38. Pulled back to blue and climbing. Got through the 38 and then ran into resistance at the 50. Pulled back to the 38 and finally got through the 50 to the 62. And that gave us our new, most recent swing high. This Friday was followed by a holiday, Juneteenth. Now the Globex markets were open, but the U.S. markets were closed. On Tuesday, I pointed out, and you can go to this day's broadcast, youtube.com/CFRN, listen to the June 20th episode. I talk about the fact that the step line has crossed blue and climbing, and that as price starts to drop, because when the step line crosses blue and climbing, whether it's the daily chart, whether it's a 30-minute chart, it's an indication that price is going to attempt to pull back to the BBC. That's the green line. Stands for bull, bear, cross. When price gets below it, we're bearish and anticipate lower prices. When price gets above it, we're bullish and anticipate higher prices. Lower, higher. BBC, bull, bear, cross. Now, we spent some time at that 50%. First it was support, then it became resistance, and as we discussed, we dropped to the 38, which we thought would be very good resistance and would give us a very nice bounce because the daily BBC was lining up with that 38% fib extension. And so we've now put in a green day that overcame the step line. Yesterday, we straddled that 50% fib extension again, just like we did over here. And now today, it appears we are overcoming red and falling, which is potential resistance. We talked yesterday about the fact that price, if institutional buyers are committed, they could drive price all the way up to the 62% extension, all the way up to this high put in basically 2 weeks ago, and further. However, today's not quite over. Should we close above red and falling today, then we look left to see the areas where we would expect potential resistance. 44.49, 44.62, 44.68, 44.93. Now again, that's based on if price closes above red and falling. As we head into the close, if price begins to drop and gets back below the step line, then most likely we're headed back to the 38% fib extension and the daily BBC. Michael has arrived, so he's going to give us a recap of everything that happened this morning in the live trading room. Then we're going to trade live on the TradingView platform for 30 minutes. And when we're done with that, I'll come back. I will share with you the winner of our tweet of the day. And then we will recap each and every one of the alerts that were issued last night and this morning?
All right.
Looks good.
Excellent. Here we go. Good afternoon, everyone. Today is Thursday, the 29th day of June, 2023. 29th day.
Time
One more
flies.
day, we're halfway through the year. It really does fly. I was just thinking of that. You know how 6 months to us, being our age, men of a certain age, seems like nothing. But I was thinking about my son, who's a fraction of our age.
Well, think of it like of a first grader.
Yeah.
They get that first summer vacation. 3 months. Now, they probably didn't become conscious of reality until probably about maybe 3 years old. Some people it's a little sooner. How old were you? How far back can you remember? How old were you?
Can I remember? I don't know. I mean, I have things that I remember from when I was in first grade, even when I was in kindergarten. And when I was young, when I was in kindergarten, I was only 3 years old.
Oh, okay. So I was just being generous, saying that maybe some people can remember all the way back to when they were a toddler or 3 years old.
Right.
So when that first summer vacation comes up for 3 months, that is a huge percentage of the amount of time that they've actually realized they're even alive. I mean, 3 months seems like forever.
It does. It does. It seems like a very long summer.
I used to laugh at my mother. She would always say, son, the older you get, faster time flies by. And I used to go, oh, Mom, stop. Every day's got 24 hours. Come on. Give it the times. Be cool, Man, that country wisdom, I'm telling you.
It's always there.
There's a whole lot of truth buried in that. All right, let me do your thing.
There is indeed. All right. But I totally agree. Totally agree. The summer right now, we're almost in July in the summer, and up north, the kids would just be getting out of school a little bit. Well, in the middle of June, normally they would get out of school. Down here, they get out in May. Oh, God. Anyway, that's neither here nor there. Okay, so if you've not taken a free trial with us and you want to take a free trial with us, go here to mytradingiq.com and sign up for it right here. It says sign up for your free 5-day training now, 9:30 to 11:30 Eastern time. Now, when you get in there and you sign up for that free trial, you should definitely download the charting platform. Okay. Whatever trading platform you're going to be using, you should download that and get it running in front of you. If it takes you more than 5 minutes to get any one of these up or downloaded or running in front of you, you need to let us know. All right. Email us, text me. Pretty much everybody that goes on the trial gets my phone number. You can text me at that number. It should not take you more than 5 minutes to get your charting platform set up. Right? Especially with TradingView. With TradingView, you just have to give us your username. We enable it, and then you can go right here to Trade Rules and click on this link right here. And that link will get you to this URL, which is this URL right here. So we get you these very charts when I hit save right now. Those very charts. As long as I'm sharing it, and I am. Okay. Yeah, if it becomes a stumbling block, you gotta let us know, because you should not let that be an issue for you. Okay. Now, we have a fair amount of stuff to get through here in the next 9 minutes before we start the live stream, so I will just get right into it. If you've not taken a free trial with us, go there, sign up for the free trial here, homepage, mytradingiq.com, sign up for it there. You get all the information you need in the spreadsheet today. Now, we were up much better than that, but we had a few stop outs at the end of the session. But it's okay. We did get our goal for the day after 6 minutes and 2 trades. We got up to $600 total. Now, if you have not taken if you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today is the 29th day of June, 2023. We made 18 ticks in the NQ, 32 ticks in the Russell. We lost 10 in gold. That was a mistake. And we made 4 on the ES. Today it took 6 minutes and 2 trades to get to the goal for the day. At that point, with 6 contracts on, the goal is $100 per contract. So with 6 contracts, we're at $600. And we took a total of 20 trades. So on the month, we are at $8,062. That's over 20 business days, averaging $403 per contract per 2-hour business day. On the year, we've got our goal at 120 out of 123 days, and that puts us at $57,869. All right, so over 123 days, we're averaging $470 per contract per morning session. All right, now the morning session is 2 hours long, but we spend about an hour of that training. The actual trading, we're searching for a trade most of the time, and actually being in the trade, we're not in the trade a very large portion of that time. Right? A lot of these trades happen in seconds. Anyway, if you were to quit trading when you get your goal for the day and you were to add 1 contract a month, this month we've earned our way up to another contract for next month. So come Monday, we'll be trading 7 contracts. If you were to do that so far this year and quit trading when you get your goal, so far this year we've only had to work about 37 hours, right? Just under 37 hours. And you would have earned $1,682 per hour for those 37 hours. Okay, $1,682 an hour for those 37 hours. Not bad. Now we'll get into the trades that we took. The markets we hardly traded anything on are gold and the ES. Okay, so we'll get into the gold right here. Now the gold, the -10 was right here. I was actually going through the training on this and it was a mistake. I shouldn't have done that one right there. For anybody that was in the room this morning, we took a trade in here when I was showing how to do trades with TradingView. And that trade lasted from here to the end of the morning session, all the way over here. You see that up arrow right there? It lasted from there at 10:56 all the way over to here at 11:35, where it finally stopped it out right there. It did have $190 in profit at one point, but I was just letting it go. I was going to see if it made it all the way up to the number that the DOM was given. Right here was a swing high, and up here was what the DOM was given. And I was going to see if it was going to make it up that way, or if it was going to give us a -10 takes, and eventually gave it a -10. But anyway, the one trade we did take right here that stopped us out was a mistake. We never got the arrow. It never came out of the oversold. And I took that trade. I was just going through the lesson plan right here. And I was saying, this is what the DOM was suggesting it was going to pull back to. And this is what it was suggesting it was going to go up to. And I put the trade on anyway. And I took it and it stopped me out. So I got -10 on that. Then I had a break even on the follow-up trade here, this green arrow. I should have taken some profit on that because it gave 8 ticks in profit from my entry point, but I didn't take any. And that was it for the morning session. That was all we did with gold. During the break here, there were a couple of trades, short trades in here. You would have only had to do one of these. It would have encapsulated the other one. And then you could have done that one too, which eventually worked itself out. I'm not sure if that would have stopped you out. It depends where your entry was. It could have been a stop out to the tick right there, but it hasn't put in a lower swing. So you would not do anything else with gold. We ended up with -10 on gold. The Russell, we had quite a few trades on the Russell. We ended with a stop out there. We'll go back to the beginning of this here, and there we are. This is where we got our goal for the day. Now the Russell was just on a tear this morning in the beginning. So right here, this was our second trade. The first trade was on the NQ. We had a break even. I think it was on the NQ. Yeah, it was a break even on the NQ. Then we grabbed this one right here for 30 ticks. Or 20 ticks, I'm sorry. We just took 20 ticks on that. Then we took another 20 on that. And then we took 2 on that. And we didn't get any more of this on the way up. That got really sideways through here where we didn't do anything. Then in here, this leg length was actually from back here, right? When I was going through the leg length stuff this morning, this was the leg length right back here. Okay, and that was actually established down here. And even all the way back here at the beginning of this run, it was right there. And then this is where we got our goal for the day. And then this is where we're expecting this next run to get, but we got 20 ticks on that. And this is where this one should have gotten, and it did eventually right up to there. And this is where this should have gotten, but it failed to right there, and that's where we got into the chop. Okay, eventually it got up there, but it failed to right there, and that's where we got into the chop. And then I was carrying that forward during the lesson plan. But anyway, so we had those 3 trades. We're at plus 42 at that point, and then we had, well, there were a bunch more trades in here, as you can see, but I got into the lesson plan, and I wasn't taking any until over here. The lesson plan ended. This was at the end of the session. Toward the end of the session, I took this long trade right here, and it stopped me out. So that put us down to plus 32 on the Russell. Okay, since then, during the break, let's see, there was one green arrow here that worked, one green arrow here that was a break even, one black arrow right here and here. Now, after a trend change, you want to see it pull back and hit the ribbon or get really close to the ribbon. So I probably would have skipped that, maybe taken this over here. Okay, it didn't put in a higher swing here, so I wouldn't have done anything in here. And that was the Russell. Okay. Now the ES, what time is it? 12:50. I'll be quick. All right, on the ES, we only had a couple of trades. We had this one, that was a break even, and this one right here, that was a +4. And that was really all there was on the ES. There wasn't a ton of trading in here on the ES. All right. And now we're getting to the NQ, and of course the NQ had the majority of the trades. I'll try to go back here, but I may just have to tell you again what we did on the NQ. Our first trade on the NQ was a stop out. Our first trade was a break even. Then we had to stop out. Let's see if I get there. Okay, that's not there. That's not there. I had a bunch of small trades in here on the NQ. Here's our first trade. That was a break even. No, that wasn't our first trade. I'm sorry. This was our first trade. We had a break even there. Then I skipped that one. I didn't do anything where it was flat. I took this one, got another break even. I took that one, stopped out. So at that point I was at -20. I got a +4 here to get me to -16. Then in here I got another +2 to get me to -14. Then right here I got a +30 to get me to I'm sorry. I was at -16 after this one. Then I hit the +30 that got me to +14. Then here I got a +1 to get me to 15, then a +4 to get me to 19. Then somewhere there was another +4 to get me to 23. And then I stopped out right here to put me back down to 3. And then there's some nice trades in here that I didn't get. And I think I was talking in here, doing the lesson plan. All right, so I grabbed this one here. We went from 3 to 18. So I had 15 ticks on this one. And then a break even and another break even. And that was the end of the session for me. That's the end of this session too. During the break, there were some green arrows in here that worked out to either give break evens or a little bit of profit. It doesn't look like any of them actually stopped out. The black arrows, a couple of those stopped out. A couple of them gave really good trades, like this one right here. All right, so if you've not taken a free trial with us, go to mytradingiq.com, sign up for the free trial over there. Okay, right here, the home page of mytradingiq.com. Sign up right there. All right, I'm going to get into live stream. I'm going to bring up the question box, see if there are any questions so far. None this morning. Okay, well, this afternoon, I guess. All right. So I just want to remind everyone, that tonight is Thursday night, and we have our partners meetings on Thursday night, 8 p.m. Eastern time. Okay. All right. So now we're going to jump into the live stream on TradingView, and this will go from 1 to 1:30. All right. For anybody that's jumping in here right now, we have a half hour of live stream trading right now. So let me slow down and go through this stuff all one more time, slowly. If you've not taken a free trial with us and you want to, go get to mytradingiq.com, click this button, sign up for the trial. When you do that, you're gonna want to go to trading platforms. It'll tell you how to sign up for TradingView, sign up for the TradingView platform. Once you do that, you give us a username, then you should go to trade rules right here. These are all the rules for trade setups on TradingView, the risk management and the trade exit and the entry. Every trade has 3 parts: the entry, the risk management, and the exit. These are all the rules for that. You should watch this setup video. I should rename that to say TradingView setup video, right? So that gives you all the information about how the sensitivity settings work and all that stuff. Right. So what we're going to do in here right now is we're going to look for things that satisfy these requirements for an entry. Then we're going to do the risk management as it's described here, and then we're going to do our best to exit the trade with profit as it's described here. All right. So right now we don't have anything, because if you were just skipping the black right here, if you're skipping the black arrows and only doing green arrows, and that is something that you can choose to do. In here we have a thing that says green only. With that, you would only get the green arrows. See, the black arrows went away. If you just trade the green arrows, you do all right. But with the black arrow being there and not putting in a lower swing, I want to wait for the green arrow to give us a lower swing right now. That's what I'm waiting for here. The reason we have a trade here, the reason we have a green arrow here, the long-term direction of these outer bands right here. Okay, I am streaming right here. Okay, the long-term direction of these outer bands right here And when you have the long-term direction that is bearish, and this black line right here in the ribbon is either in red or in the silver, and price drops out of the overbought down here in the slingshot, that's going to give you that green arrow. The green arrow is the highest probability trade. Okay, all those rules are defined right here. This would be a short trade with the slingshot. Black arrow in the ribbon must be on top and in the red or silver, and the lead or the black line in the slingshot must cross below the overbought level, which it did. It does not need to touch ribbon on the pullback, but if it does, then it's a higher probability trade and the green arrow will show. All right, if it doesn't hit the ribbon, then the arrow will be black. Okay, that's what's going on there. So we need to put in a lower swing right here. All right, once we have the lower swing in place, then we will look for another pullback. Right, but the entry point should have been up here at the bottom of this, the close of this candle, where the green arrow is. That's where the entry point would have been, right here. It's 86.75, and it just dropped all the way down to 74. Now it's got just a tiny bit lower swing, so we'll look for a trade here. Okay. Now the thing about this on the NQ right now is it's just a tiny bit lower swing. It's not hitting the ribbon yet, so it's not a trade yet. It's got to either hit the ribbon or it's got to get into the overbought for this to be a trade. Right? And neither one of those have happened yet, so it's not going to be a trade yet. Okay. So let me bring this back up. If anybody that's watching the live stream right now, if you have any questions, just type them into the live stream and I will answer your questions in there or in here. All right. So this is the NQ DOM right here. And this is a DT Pro DOM that I'm trading on. All right. There was a question this morning in the room this morning. Why don't I just trade on TradingView? Well, one, TradingView is not a broker. So anything you do on TradingView is just another layer on top of the broker. Okay, see that made a nice move down, but it didn't pull back deep enough to give us a trade. It's just another layer on top of the broker. Like if I click on this right here, that's what you would have to trade on. If I had connected this to my DT Pro account, which I can do, it's just another layer on top of the DT Pro account. Okay, so I'd really rather reduce the number of layers that we have between my entry, my actual entry, and the exchange. Okay, between me clicking the mouse and it happening on the exchange. So you see that last green arrow, the green arrows are the highest probability trade, and that was just a view right there. Now it's pulling back up. We want to see it up into the ribbon or into the overbought, right? For the NQ, I'm going to slide this DOM off to the side because it doesn't have a trade here right now. And the Russell, see the black line here is starting to pull back. Needs to get up into the overbought. The ES has the same thing. The long-term direction is getting bearish on both of those. On all three of these markets, the long-term direction is getting bearish. Okay. All right, so price is pulling back up, getting up into the ribbon, but now we're in the overbought section right here. We actually just touched the ribbon, so we need a down close right here on this. Now we're going to bring the NQ down back over. We need a down close on this. We're going to pin that to the top. We're going to subtract 4 from that. So 74.75 done 70.50 is what I'm going to sell, right? 70.50. Right, now that number just bumped up a couple of ticks. It's going to be right there, I believe. All right, 4 points from the top of the bar. Now this might not end up being a trade, so I'm going to cancel that order for right now. Okay, the reason it might not be a trade is because right in here, as this bar moves up, see how the black cut into the green right there? That disqualifies short trades. So the NQ is not giving us a trade right here, but we may get something over here on the ES and the Russell. So I'm going to bring the ES DOM over. Oops, that's Russell DOM. Bring the ES DOM over. And we'll watch that one as it comes together. Okay, I'm going to slide it right here on top of the NQ because the NQ is not giving us anything right now. Now the deal with the ES right now, if we have a down close that pulls this black line out of the overbought, then that's going to be a shorting opportunity. Right, it's going to give us a black arrow. Now typically I don't like to trade. I don't like to trade after a trend change. I would rather have a green arrow pull back all the way up to the ribbon. All right. Now we're kind of limited in time in here, but really that's no reason to take any more risk. So after a trend change like this, when the longer term direction goes from up and bullish like it is right here to down and bearish like it is right here, I like to have a deeper pullback. I like it to actually hit the ribbon. So that's what I'm looking for on the ES and on the Russell right now. Okay. So I'm going to slide the ES down back over. I'm not going to take that black arrow trade right there. I'm going to wait for it to pull back a little bit deeper and hopefully hit the ribbon. Over here on the NQ, you see how the long-term direction is flat right there. There's no separation. You don't want to trade when it's like that. As a matter of fact, we have a thing called no trade zones. And when it's flat like that, it filters out the arrows, right? Or it should filter out the arrows, depending on what you have the sensitivity set to. Okay. If anybody that's in the live stream right now, if you have any questions, you can type them in. And I'll answer them. I'll either answer them verbally or I'll type in a response, or Dwayne could type in a response, depending on what your question is. Right, but you see over here on the Russell, now this is a pretty deep pullback here on the Russell. I take a down close now. We're just about hitting the ribbon. If we get it, we are hitting a ribbon. Now, if we get a down close here on the Russell and it pulls this out of the overbought, you're going to get a green arrow. Right, so let's bring that down over and we'll just watch that. Right, the high on this is 96.3. Minus 5 is going to put your sell, minus 8 is going to put your sell stop limit right there at 95.5. Why that number? Because it is 8 ticks below the top of the bar. What does that mean? Well, if the top of the bar is right here, now the top of the bar is right here. If the top of the bar is right there, then the bottom of the bar is going to be right here. These are 7-tick range bars. So 7 ticks below the top of the bar is where that bar is going to end. So I want to sell. If it does close down right there, then I want to sell it. So I don't want to be missed. I don't want to miss out on the trade, right? The FOMO thing. That doesn't happen with range bars. 96.5 now, that's 90 right there. Okay. Because you can be proactive with this. Right? The ES is starting to come together too. So the ES right now has a high of 29.50, so I'm going to sell 27.50. Okay, so if we get a down close here and it pulls it out of the overbought, that would give us a green arrow. If you get a down close here, whether it gives us an arrow or not, it's going to be a ribbon trade. All right, I'll go over those rules again in a minute here from the trade rule page on mytradingiq.com. I should probably say that too. If you have not taken a free trial with us and you want to take a free trial, go to mytradingiq.com. It's 5 days of training and trading, 2 hours a day, every single day. If you like what you see here, okay, we just triggered into both of those. So that stop's going to break even over here. And we got to get 4 ticks in profit here on the ES for the stop to go to break even. But we triggered into both of those trades right there on the down close of both of those bars. Now you see how I was proactive and I was able to put my order on ahead of time. Now on the Russell, the Russell's the one that's in the money right now. This is where it should go down to. By reading the DOM, I'm getting that. But if we take it a step further and we look here, 92.9 is where that should go down to. 92.9, way down there is where that should go down to. So I'm going to lock in a little bit of profit right here. Now with the Russell, it's only $5 a tick. So with 6 contracts, it's $30 a tick. So every time this moves up or down one, it's $30. Okay, with the ES, it's $12.50 a tick. Right, so I just made $30 on that one. With the ES, it's $12.50 a tick. So every time this moves up and down one with 6 contracts on, it's $75. Okay, so I'm going to slide that back over. That trade triggered. I think it's going to go down. It should try to get down to this level right here. Okay, that's what I would look for on that. Now in the DOM, it actually gave something else. I had another number that I was looking for in the DOM. I can't remember what it was. I think it was 94.9. The DOM was suggesting 94.9. Let's bring this ES back up so we can keep track of this now. The DOM was suggesting 94.9 is the first spot that it might stop at. And it pretty much did. Yeah, 94.9 is where it was suggesting. Okay, so on the ES, the stop is 10 ticks away. Now, I'm going to take a breath and go through the rules with you. All right, these are the trade rules. Now, both of these trades were green arrows. All right. So to get a green arrow, you have to have a short trade with the slingshot. That means the black line in the ribbon must be on top, and it's got to be in the red or silver. And the lead line in the slingshot, the black line in the slingshot, must cross below the overbought level. Yeah, I'll put it down here. Must cross below the overbought level. And it does touch the ribbon. Okay, it does touch the ribbon. What that means, if it touches the ribbon, then it's bouncing off of resistance, established resistance, right? That's why you get a green arrow. The green arrows are the highest probability trades, right? So on that one, we ended up with just 1 tick. On this one, we're still in it. The stop is 10 ticks away. What the ES should do is get down to right here. At a minimum, it should get down there, right? At a minimum, it should go down there. Now, it looks like it's probably going to stop us out, but I don't know. It could just push down here from the ribbon and give us something down here. Now, when I read the DOM right now, move this down a little bit, slide it up a little bit. I can't. Okay, when I look at what you guys can see over there in TradingView, there. So when I read the DOM, I look at these totals down here, and I see where the highest number is, right? That's where price is going to try to go. So you look for the anomaly that's got that highest number, that's producing the highest number. And it's still looking like it's going to favor the downside. So we're not dead with this trade yet. All right. Now, whenever I take a trade, the risk is pre-established because these are range bars. I know exactly how much risk I'm going to have on the trade before I actually take the trade. Okay, these are 7-tick range bars, so I have a 10-tick stop. I've accepted that. On every trade that I take, I know I'm risking 10 ticks. All right, with the ES 10 ticks, with 6 contracts on, is $750. All right, I've accepted that. It's $125 per contract is what it is. All right. Now, if it stops me out, it stops me out, and it did. And that is just part of trading. Not every trade is going to work out. This morning, see, the Russell trade just worked out. The ES trade did not. Now, the ES almost went enough to get our stop to break even, but it gave us some slippage in the beginning. So we ended up stopping out on that ES trade. And that's okay. Stop outs happen. But let's go here. Did anybody ask any questions yet in the live stream? No. Do I have the questions out for that one? I do. Okay. All right. So now we wait. All right. On the NQ, we're starting to get a little bit higher swing here. And you see the bullish separation starting to develop here. So this is good on the NQ. Let's get it in a bigger picture. Let's look at it in a bigger picture. Right here. Right here, the long-term direction is starting to get bullish. We're breaking out of this consolidation that we had right here. We're breaking out of it, so it's starting to move up. Okay. If it does move up and it pulls back down and gives us an opportunity to trade, hopefully we'll get into the ribbon, or this will be oversold. Okay. All right. So we're looking for this to pull back down, get into the ribbon, and then move up. That's what we're looking for. Okay. All right. So let me minimize this and we'll go look at the other markets. All right, so now we're looking for it to pull back down and get into the ribbon here. We got a nice higher swing, and we need to pull back down to get into the ribbon here, which it hasn't done. All right, over here the gold is just flat. We don't have anything there. We don't have anything here, and And we don't have anything here. Okay. So we are getting a pullback. We're now in the oversold here on the NQ. So if we pull out of the oversold, now this is the trend change, right? What I say earlier, when I get a trend change, I like to pull all the way back into the ribbon. We haven't done that yet. So it'd be a little risky if I take this trade right now on a black arrow, which could occur. Okay, so I'm gonna let it pull back a little bit deeper here. Hopefully it will get down into the ribbon and give me a green arrow. But again, you gotta look at the bigger picture here. Is this just a retracement in a bigger downtrend? When you look at the bigger picture like this, if you look at, say, Fibonacci retracements, is this just a bigger picture? And the bigger picture, this is just 50% retracement of this move down, is what it is. Okay. So let me get rid of that, and we'll make this thicker, and we'll come back here. So is it just going to keep going down right here? Maybe. All right. Now it didn't give us a black arrow here because it's looking at the long-term trend. You know, the software is looking at the long-term trend. That's why it didn't give us the black arrow yet. Okay. So we're waiting for something else to develop. If anybody wants to look at anything, you know, anybody that's out there in the live stream right now, if you want to look at anything other than futures, just let me know. I'm happy to look at any kind of anything. You know, yesterday we had some guys that asked for some stocks to look at. I'm happy to look at stocks if you want to. You know, while we wait here, we only have 10 minutes left in this session, so we don't have that much time. But I'm happy to look at anything that you want to look at. Just give me a symbol. It could be crypto, it could be forex, it could be ETFs, stocks, or anything in futures. Okay. All right. ZF. Sure. I will look at the ZF. With the ZF, you can look at that on a really small time frame. Okay, but I'll look at it on gold. Gold's not going to say anything. Let's just go to ZF over there. Get a 5-year notes, and we'll look at the U contract on that. We'll load up. Now this is what it looks like on a 7 range. Okay, but every one of these bars on a 7 range is going to take like 5 or 10 minutes or more. This was a half-an-hour bar. So if you bump that down to a really small time frame, like a 2 range. Okay, and this I gotta show you this too. Double edge. If you drop down in the time frame like that, check the no trade zone. Okay, because the no trade zone needs to be adjusted. So here we have a 0.01 for this. It's got to be less than that. So 0.002 is what I think. Oops, I think 0.002 is what I think I had for the ZB to begin with. All right, yeah, that's pretty good. So when you change symbols, you got to drop down. If you look in here on trade rules, I think I have it up here too. ZB, ZN, and ZF 0.002. But when you drop down in time frame, you also got to check the no trade zone. But this is what it looks like here. All right, so we had a nice green arrow right there. This was a ribbon trade you could have taken right here for a couple of ticks. It pulled back here and gave you another shot at just a ribbon trade, and then it gave you the black arrow and pulled out of the overbought. And this right here was also a ribbon trade with the black being in the red, so you didn't have to wait for the arrow on that. Okay. Yeah, 2 range. That's it. 5-year 2 range is what I'm looking at, and it's the ZF is the 5-year bond. So this has got a ton of liquidity in it. I think the ZF has got more liquidity than the ES does, actually. So, I mean, and it's 30, wait, this is, the ZF is $15 a tick, I think. Is that right? The ZV is 31, the ZF I think is 15, and the ZN, is the ZF 7 something, I don't remember exactly. The ZN is 15, the ZF I think is 7 something a tick. Okay, but this did not put in a lower swing, so you wouldn't be looking for another trade here right now because it didn't put in the lower swing. Right, that is the ZF. Thanks for asking. Anybody else want to see anything? In here, we never hit the ribbon. We did come out of the oversold, so we should have actually had a trade in here. I got to check something on that. Should be 0.35. Did I leave it? Did I change it? I didn't. Okay. Coming out of the oversold right here, we should have had a black arrow. Right in here. Should have had a black arrow there, and probably another one right there. Coming out of the oversold. It finally did while I was looking at the ZF. It pulled back down, and it hit the ribbon right here. Okay. So we're coming off a higher swing. It's pulling back again. So we might get another opportunity here. We are oversold, so we might get another opportunity here on the NQ for another trade. Right, I'll bring that over. Now looking at the NQ, do that. The low of this bar is 95.25. It's going to be looking at 99.25 plus a tick, 99.50. So your buy stop limit order would be right there. Right now, that's making the assumption that this is going to pop out of the oversold. If it doesn't pop out of the oversold, it's not a valid trade. Okay, so it closed down and we're going down a little deeper. Now we're actually hitting the ribbon. So if it pops out now, it's going to give us a green arrow. So it's going to be 94 up to 98.25. 8.25. The low of the bar plus 17 ticks is what you're looking at. Okay. So now the low is at, what is the low at? 93 and 93, so it's going to be 90. You might not end up with a trade here. Now the low of this bar is all the way down there. If this bar closes down, we're not going to end up with a trade. I'm just going to cancel this order for right now. Sydney, I will get back to you about helping you. All right, we'll get together today. I'll get your TradingView open, right? I see you on the audience right now. All right, so back here to the live stream. I don't know if anybody typed in anything else. Okay. Yeah, so anybody that has any questions, type them in. If you want to see another symbol, just let me know. The NQ may give us a trade here. I'm not so sure. No, it didn't. All right, the black got into the red, so it didn't give us a trade. So it did not give us a trade there. All right, so we only have a couple of minutes left in here, guys. I don't know if we're going to get another trade set up. Over here, we're above the ribbon, kind of. The ribbon's not really developed here. Long-term direction is flat. On the Russell, we started to change direction here, so it's going to have to pull all the way back down and hit the ribbon and give us an up close. The gold just isn't giving us anything. This isn't gold anymore. This is CF. Oops, let me change that back to gold. Let's see. Maybe gold was giving us something, and I don't know. No. Well, gold gave a short right here that would have given some opportunity for profit, but it didn't continue the trend. And that's on a 2 range. Go back to the 7 range, and it didn't give anything on a 7 range. Okay. So we didn't end up with a trade here because the black line right here got into the red. That red disqualifies it. Right? It's now 1:28 and a half. We have a minute and a half. I don't know if we're gonna have another trade. Okay, so if you like what you see in here and you want to do this every day with us, we do it from 9:30 to 11:30. If you want to take the free trial, the only way to get the indicators is to take the free trial. Right? That's the only way for you to get access to these indicators, is to take the free trial. To do that, you go here to mytradingiq.com, sign up for it right here. 9:30 to 11:30 Eastern time every business day. Right? If you can't make those hours, then you can still take the trial and get access to the indicators and set up some time with us. We'll do one-on-one meetings with you and try to help you understand what's going on. Right? It's not that difficult. It may look like a lot of stuff, but it's really not. And once you understand what you're doing, what you're looking at, then it's like reading a book. It really is. Right. So I don't see any more questions coming in. And we have about 20 seconds left before we hit the bottom of the hour. Let me jump in here and see anything in here. Nope. Over here. All right. So no higher swing here on the NQ. We do have a higher swing on the Russell, nothing on the gold, and nothing on the ES. So the way this is setting up, if you look at the larger time frame stuff, we were watching this earlier on the gold, seeing where it was going to go to up here. That was when we had that trade on forever. We're waiting to see if it was going to keep going up, and it didn't. On the ES, the larger time frame stuff, the ES is probably going to try to get up to this weekly trading zone, but it did find some resistance up here. Not the Russell, this Russell. Okay, the Russell has come all the way back down here to this area right here that we highlighted earlier today in the room this morning. If it was going to keep going up, it was going to go there. And if it was going to come down, this is the area that we thought it would find support at, and it did. And it's there now. It should be bouncing off that now. And the NQ. The NQ is at the ribbon right here. When it was down here, we were saying this right here, I drew on this line here. I think it's going to find support there. It went through it a little bit down to this area down here that we also said if it goes through that, it'll probably find support here. Almost to the tick. If I move this over like that, if I move this over this way, almost to the tick, it hit our lips, and then it bounced all the way back up through the weekly trading zone to the ribbon. That's where it is right now. And the midpoint above it is right here. So it's going to find some resistance there, I think. All right, so it's time for me to wrap this up. We still don't have any trades in here. The NQ looks like it's probably going to go up and find a little bit of resistance. If you want to take the free trial, go here. On the year so far in the room, we are at $8,062 on the year. On the month, we're $8,062 in the room, and on the year we're at $57,869. That is with one contract. All right. This is a spreadsheet that goes. It's hard to hear the results going back over 10 years. There. With that, I believe I'm going to wrap it up. Don't forget partners meeting tonight. Anybody that's out there that is not a partner that wants to become a partner to get into the meeting tonight, I think we're going to have a lot of stuff to go over tonight. So become a partner before tonight. All right. That's it. With that, I'm going to wrap up the live stream. There you go. Okay, now we can pass it back up to fabulous Phoenix, Arizona. It's Studio A overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
I'm ready. Recap of the morning session.
Today it took 6 minutes and 2 trades to get to $600.
Good job.
Thank you.
Okay, guys. Let's pick up where we left off. Logic 247 is our 24/7 around-the-clock E-mini alert service. Now, it's not just the E-minis. It also includes crude, gold, silver, euro, bonds, and even soybeans. Over the last 256 weeks, we've issued over 14,500 individual handcrafted alerts. Now, futures trade around the clock, and we have traders around the globe. So our day session is their night session, and vice versa. So a logic alert can come out at 2 a.m. or 2 p.m. whenever opportunity presents itself. Since the market opened Sunday night at 6 p.m. Eastern, this past Sunday night, we've issued 52 alerts, 6 never triggered. We're still waiting on the outcome of 6, so that gave us 40 actionable alerts, of which 8 or 20% would have been stopped out based on not risking more than $300 per contract, per trade, less when possible, based on market structure, and a simple 3-step process we teach all of our lifetime members in their unlimited one-on-one mentoring sessions. Over the last 256 weeks, we've averaged 20% or less of the alerts being stopped out based on the risk profile I just explained. Now, there's a caveat. You never risk more than the potential profit in a trade. If it's an alert, the difference between the entry and the final trade to target, it could be $1,000, it could be $2,000. You still don't want to risk more than $300 per contract, per trade, less when possible. Now, each alert has an initial target. That's designed to help you get your goal for the day. So even if the alert has $2,000 of potential profit in it, if you know you're going to get out at the first target to get your goal for the day, that's the maximum you want to risk. If you plan to stay in to the second target, or the third target, the fourth target, then your risk should be commensurate with where you plan to get out of the trade. Never risk more than the potential profit in a trade, whether it's an alert or not. Occasionally there'll be an alert that only has $200 of potential profit. And in some rare cases, only $100 of potential profit. Do not risk more than the potential profit in the trade, whether it's the alert itself or where you plan to get out. Okay? It's very important. Risking more than the potential profit in a trade, which is defined by you despite the alert. You're the one who decides, I'm going to stay in till the first target, I'm going to stay in at the second target. Never risk more than $300. Risk less when possible, based upon the techniques that I teach you in our one-on-one mentoring sessions. Okay? So, we're right on target at the moment with that 20% number. That's what we've averaged over the last 256 weeks, 14,550 plus individual handcrafted alerts. Now, some of you are new and you may not know what an alert actually looks like. So I'm going to show you real quick here exactly what our members and trial members see each and every day. And then we'll move on to the concierge trade alerts. Now the logic alerts are based on current price action, but there's time built in to each and every alert. For you to receive the alert, go to your 30-minute chart and identify the window of opportunity that the alert represents, so that number one, you'll be prepared to take action when price reaches the entry. And if you repeat that process enough times, get the alert, go study the 30-minute chart. Pretty soon you start to spot your own windows of opportunity. And remember, our goal for you is that you become self-sufficient, that you reach a point where you no longer need anybody to tell you when to get in or when to get out. However, until you reach that point, that's exactly what we're going to do. With the goal being not that you just trade the alerts and don't have to learn how to trade. Use them as the tool they're intended to be, to help you learn to spot the windows of opportunity on your 30-minute chart so that you can take action on your smaller time frame range chart when price reaches the entry. So we're in week 256. Last week we ended up with, I think it was 80 alerts, 17 never triggered. We had 63 actionable alerts, of which 7 or 13% would have been stopped out based on that risk profile I just explained. So Sunday night began at 6 p.m. Eastern when the Globex markets open. That's when our week begins. For stock traders, the week doesn't begin until Monday morning at 9:30. Those of us who trade futures, we go to work Sunday night at 6 p.m. Eastern. I mean, you don't have to. If you want to take Sunday night off, by all means. But the alert channel opens for business at 6 p.m. Eastern. Now, the time you see here is Pacific time, because this is the Telegram app. It reads the clock on your computer. So if you look at these alerts on your computer and you're on the East Coast, this will say 6:21. This will say 6:18, because we all know that there's a 3-hour difference between Pacific time and Eastern time. The first alert coming out of the gate Sunday night, I put the CTAs out first, and then I did the logic. B means buy. T means initial target. Now, on this alert, there was only one target, and it was right at a weekly trading zone. The idea was to buy 128.07, and at 128.17, you had your goal for the day. You could put the mouse away. Okay? So you got your goal Sunday night for Monday. Price continued on in this move to 128.25. So our experienced traders may not have jumped out at the initial target. They may have stayed with it because it went another 8 points. The next alert was to be short the ES. Here's the initial target. That's designed to get your goal for the day. Here's the second target. Here's the third target. Here's the final trade to target. S means sell. T means initial target. PS means potential support or second target. This would be the third target. This would be the final trade to target. And so at the time the recap was done, going back to Sunday night, price had reached 43.75.75. So 43.86 to the initial target, to the second target, to the third target. Now from 86 to 75, that's 11 points at $50 a point. That's $550 per contract traded. Once you've earned the right to trade 10 contracts, that would be $5,500. You don't start trading live when you become a lifetime member. First, you have to learn the strategy. So the 24/20 blueprint is going to instruct you to put together 10 consecutive days in a row in your demo account where you reach your goal, 10 trades or less. Once you accomplish that, then the blueprint will give you the green light to go live with one contract. Once you go live with real money, with one contract, your goal is to increase your account balance by $2,000. Once you accomplish that, the blueprint will give you the green light to add a second contract. The big difference between the first and second contract is this. The first contract is funded with your startup capital, or the money you use to open your account. The second contract is funded with profit you earned in the market. The blueprint's going to tell you when it's time to add number 3, number 4, number 5, number 10, all the way up to number 20. You only add one at a time when the blueprint says it's time, and you only add with profit you earned in the market. If you have the discipline to follow that formula, your chance of success is pretty good. And the chance of blowing up another account becomes much less, unless you consciously choose to break the rules as they're clearly laid out, both in the live training room every day and in the blueprint itself. The next alert, number 14,535, was to be short the Dow. Got stopped out. Next was a short on the Russell. The entry was 1828. The initial target gave you your goal for the day. And at the time of the recap, price had dropped to 1825.2. On the NQ, we had a short. On the smallest time frame entry, you would have done okay. But what we record is the first trigger only. Okay? So even if this went on to go all the way to the final target, we're going to record it as a stop out based on the initial trigger. Okay? Then we had a stop out on crude. That was a long buy, initial target, potential resistance, final trade to target. On gold, the idea here was to be long at 1934. The initial target gave you your goal for the day. And then the final trade to target was 1936/37. So from 34 to 36, that's $200 per contract traded. Now, price hit 1943. So you see it went far beyond the final trade to target. And again, as you learn our methodology and strategy and how to read the indicators and use the weekly zones, you might choose to stay in beyond the final trade to target. From 36 to 43, that would have been another $780 per contract traded. Then we had a long on silver. The entry, 22.55. Initial target, 22.57. 2 pennies in silver pays you $100 per contract traded. Once you've earned the right to trade 5 contracts, well then that's $500 for the same 2-penny move. At 10 contracts, it's $1,000. Remember, no matter how much money you got, you don't put the cart before the horse. It's awkward for the cart and the horse. Make sure you put together 10 consecutive days in a row in the demo account. Not to prove anything to me, but to prove to yourself that you understand the methodology, the strategy, and the indicators well enough to justify risking real money. Okay. And then we had a long on the euro. And we made it to the first target. And we almost made it to the second target. Now that's at the time the recap was done. Go back and look at the chart. We may see that it did ultimately go all the way. But that's not important. What's important is where price was at the time we did the recap and where you chose to get out of the trade. Now let's say you were hanging in for the second target. Okay. When the chart starts to show weakness, then you exit the trade. We'll teach you how to spot that weakness. When you see the Z's, that means it never triggered. This was a short on soybeans. And Sunday night, we were still on November beans, but we should have rolled forward to the X contract. We're now on ZSX. Also, we should have rolled silver a couple days ago, but I rolled them this morning. So now on silver, we're on ZSIU. As you can see up here, we were on GSIN. Now we're on GSIU. Okay. Here we had a stop out on the ES. Then we had a short on crude oil from 69.20 to 68.90. And then it continued dropping to 68.78. Here's gold, alert number 14,545. The idea here was to be long 41. Initial target's 42. Second target's 43. The next target's 48. Time of the recap, it had not reached the third target. Silver again. This was a long. Here was a stop out on the Dow. Here was a long on the NQ. Now the initial target is always $100 per contract traded, with the exception of the NQ. Because of its volatility and the requirement for more risk, this is a $200 per contract trade. Soybeans, again, we're buying 15.13. Initial target 15.15. That's $100 right there per contract. And then 15.19. And we made it all the way to 15.25 at the time the recap was done. So that's 12 pennies at $50 a penny. No trigger on the euro, no trigger on bonds. Now that all happened Sunday night. Everything I just showed you happened Sunday night. Remember, stock traders are waiting for the markets to open Monday morning at 9:30 a.m. Eastern. So as we roll into Monday, got a no trigger on the Dow. We had a short on crude oil. We had a short on gold. We had a short on the ES. And then we roll into Tuesday, where we had a long on the ES, a long on the Dow, where we exceeded the final trade to target. On the ES, we actually exceeded the final trade to target by 1 tick. Final trade to target was the zone above. On every alert, if it's a long, if you're buying the market, final trade to target is going to be the weekly zone above. If you're selling the market, final trade to target is going to be the zone below. And price is always trying to reach a weekly trading zone. If it's above the 30-minute BBC, it's trying to reach the zone above. If it's below the 30-minute BBC, it's trying to reach the zone below. On the Dow, we had a long at 34,150. Initial target goal for the day, 34,170. And then the final trade to target was 34,175. And we exceeded that by 2 points. Then we had a long on the Russell. Okay, 1863 to 1865. That's your goal for the day. 1867 would be another day's goal. And at the time of the recap, we had reached 1869.2. Short on soybeans, 14.92 to the tick. On the Russell, we had a long, again, to the tick. Stop out on the NQ, long on crude oil, short on gold, short on the euro, no trigger on the Dow, short on bonds. And this is where I told everybody to roll soybeans to ZSX. Okay. The idea was to get short at $12.80. The initial target would give you your goal for the day. And 76 would give you another $100 per contract. We exceeded that. There's a long on the ES. We hit the first target, and at the time of the recap, we had not quite made it to the second target. So now we're into, let's see, Wednesday, 28th. Well, if today's Thursday the 29th, yeah, this is Wednesday. Had a long on the Russell. We had a long on the NQ. We had a short on the euro. No trigger on crude. We haven't triggered yet. We're still waiting on this soybean alert. Long on the ES. Stop out on the Dow. Stop out on the Russell. Long on the NQ. Short on gold. Short on the euro. And then that brings us into today. We have a short on the NQ that hasn't triggered, or it hadn't at the time this recap was done. Crude oil, got a long. We had a long on the Dow, which reached its target and then some. And we're still waiting on this gold alert, and we're still waiting on the euro. And the next alert I post will be number 14,585. Now, I don't walk through all of those every day, but if you're a member or a trial member, you have access to this week's alerts. You have access to all 14,584 alerts. Huh. Imagine that. Okay. Now, our original alert service, the concierge trade alerts, they're a little bit different. They're based on historic price action. When current price action meets historic price action, that's where you'll find some of your best high probability, low risk trade opportunities. The CTA report is published shortly after the Globex open each evening, and then those numbers are carved in stone for the entire session, just as the weekly trading zones, which we've published since December 14th of 2009. Once they're published Monday morning at 6:15 a.m. Eastern, carved in stone for the entire week. They don't change in any way. We don't massage them, manipulate them. It is what it is. And you'll see the importance of them as we go to the charts. Now, what do you do when this report is published? Every one of our members and every one of our trial members got this information last night at 6:25 p.m. Eastern. Cover all the same markets. We'll just use the ES as an example because it seems to be the most popular. When this report is published, the first thing you do is go to the 30-minute chart of the ES, whatever market you trade, or markets. Make note of where price is at this time, okay? It's always going to be between these two numbers. When you make note of where price is on your 30-minute chart, draw a line in the sand at the long target, draw a line in the sand at the short target. These serve as great visual cues to help you stay on the right side of the street. Once the report's published, if price gets above the 30-minute BBC, then it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. It's that simple. You do have to look left to spot potential obstacles. Previous swing highs or swing lows can become current resistance or support. And you have to learn how price behaves around a weekly trading zone. As I said before, price is always trying to reach a weekly trading zone. Price is above the 30-minute BBC, it's trying to reach the long target, or it's trying to reach the zone overhead and the long target. If price is below the 30-minute BBC, it's trying to reach the zone below. We've published the zone since December 14th of 2009. Members and trial members get them at 6:15 a.m. Eastern on Monday. Once you understand how price behaves around a zone, the zones will become one of the most important tools in your trading toolbox. And even after you master the strategy and the indicators and you don't even really need the live training room anymore, because you're a lifetime member, you can of course pop into the live training room anytime, request a one-on-one mentoring session anytime, but you'll definitely want to pop in and grab the weekly trading zones and get them on your chart before Wall Street wakes up week. Now, in order for it to be simple, you got to resist the urge to make it more complicated than that. As long as you know which way the wind's blowing, it's pretty simple to reach your goal for the day. I'll show you exactly what I mean. Now, we already talked about the daily chart. And as we discussed today and yesterday, well, go back several days, we said when price hits that 38% fib extension and the BBC, the daily BBC, the green line stands for bull bear cross, bearish below it, bullish above it. Okay. We said when price hits that 38% extension, we expect the bounce. Now, once blue and climbing turned to red and falling, see, this is bullish. It's what I call a perfect stack. But once that step line crosses blue and climbing, whether it's on the daily chart or the 30-minute chart, whether it's the S&P or Walmart or Amazon or Bitcoin or the British pound or the spider, then that tells you that price is attempting to pull back to the BBC. Price always reverts to the mean. So we got that beautiful bounce that we anticipated and talked about all these days. And you can go to youtube.com/CFRN, and if you missed any of these daily episodes, you can watch them in their entirety. So we expected to find resistance at the 50% extension and red and falling. That's what I call resistance times 2. In other words, there's 2 reasons for the market to find resistance. Now, got a daily doji, which represents indecision among the institutional traders. And they are the ones who move price. Why? Because of their account size. Most institutions have accounts in the hundreds of millions or billions of dollars, and then you have the BlackRocks of the world with 10.5 trillion under management. When they place trades, price moves. Retail traders typically have accounts in the thousands or tens of thousands of dollars. When we place trades, that doesn't move the market. Our strategy and indicators are not designed to outsmart these institutions or even beat the market. The market's our business partner. Imagine waking up every day going, I can't wait to get to the office and beat my business partner. No, we respect the market because the market's always right. Our strategy and indicators are designed to help you understand what the deep pocket traders are doing or not doing, so that as you move to the smaller time frames where you execute your trades, you can do what the deep pockets are doing. Because remember, it's their trades that move price. We've got a stalemate going on. Resistance overhead. The step line below is support. If we take out the low of yesterday, then we have a 20-point window of opportunity back down to the BBC. Now, as you can see, the pullback holds more often than not, whether it's pulling from below or pulling from above. Held here, held here, held here, held here, held here. And then we went for an extended period. And I kept saying price always reverts to the mean. So, don't think we're going to the moon, because we're not. That's not how markets work. You get a leg and a retracement, and then a big leg and a deeper retracement. Price always reverts to the mean. In our case, the mean just happens to be green. We call it the BBC. Bull, bear, cross. Okay? It's all simple, right? So what does this tell us? It tells us that earlier on, institutional traders were pretty bullish because they pushed price up to the high of the session, 44.3775. But suddenly they're not quite so bullish. So where we close today will be very important. If we were to close above red and falling, then we would anticipate a rally tomorrow up to here, up to here, up to here, and then up to here. If we close this session below red and falling, Then there's the potential for support at the step line. But if we take out yesterday's low, then there's a nice 20-point opportunity down to the daily BBC. Okay? All right. Now, all alerts are created on the 30-minute chart. The logic alerts and the concierge trade alerts. These are the lines in the sand you heard me speak about. Okay? This vertical line separates today, Thursday, from yesterday, Wednesday. Keep in mind that the Thursday session started last night at 1800 hours Eastern Standard, 6 p.m. Eastern. Okay? So, the market opens, we have a green candle, and it basically takes us right up to the target. Price then pulls back to the BBC and actually trades below the BBC. Now, once price is below the BBC, can you trade short? Sure. But are you trading for the short target? Well, before you can really think about trading to the short target, got to get below this weekly zone. Because when price rallies up to a zone, we expect resistance. When price drops to a zone, we expect support until proven otherwise. Okay? Now, these candles spiked the zone. The zone is 4413/14. It spiked the zone, but it never traded below it. You never had a candle open and close below the zone. So the pullback to the zone held. When price drops to a zone, we expect support until proven otherwise. Just like we expect resistance until proven otherwise. See, this candle opened and closed above the weekly zone. And we put in a high at 44.30 1/4. Price at 10. Now the zone is 4413/14. This low right here is 14.5. So we missed hitting the zone by 2 ticks. So you really want room to run. So this is not a trade that I really would have been interested in. A trade I would have been interested in would be this one. Price gets back above the BBC. Red and falling turns to blue and climbing. We now have the perfect stack. Price, step line, blue and climbing, BBC. So once this candle closes above, and then this candle opens at 44.22. Got an 8-point run right up to the zone, or to the target. Then we consolidate at the target for a few hours. We drop back below the BBC. And where does price go? To the zone. And what do we expect? Support. When the market finds support, it will go look for resistance. So the pullback to the BBC held. It actually spiked up and touched red and falling. So that's true resistance. And so the following candle dropped all the way back to the zone. Then we get above the BBC and we hit the target again. Put in a little double top up here. Now we're back below the BBC. And so where's the logical place for price to go? The low of this candle is 44.17. So 44.16 44.14, there's a 2-point window of opportunity. 44.16, 44.14. I should move it down just a little. There we go. You definitely want to get below the low of this candle. And you see how the low of this candle, look at the horizontal line on the cursor. This low and this low are identical. And when the market finds support, like it just did on this 30-minute candle, it's going to go look for resistance. Finds resistance, it's then going to go look for support. That's why the window of opportunity is below the current low, which is based off this low. If price gets below the weekly zone, I would be hesitant trading to the short target because this low right here is potential support. On yesterday's broadcast, I drew in these two windows of opportunity. We wanted to see a break of this low, and then we had a 2-point window of opportunity down to this low. And if you go back and watch yesterday's show, if you didn't see it live, I said if price takes out that low, then we have another 2-point window of opportunity down to this low. And shortly after I drew those in, boom, price gave you 2 points, and then it kept rolling and gave you the next 2. So I'm doing the same thing over here as I did yesterday. Okay. Right, that's the story of the ES. We'll move a little more quickly through the rest. Market opened at a zone, dropped below the zone, dropped below the BBC. It's red and falling overhead. Now, to get your goal for the day on the S&P, you need 2 points. On the Dow, you need 20 points. The S&P pays 50 a point. The Dow pays 5 a point. So this candle right here opened at 34,117 and put in a low at 34,096. That's your goal for the day, right there, without even having to hit the target. You just have to understand the strategy. Then price gets above the BBC, and we expect resistance at the zone, right? This candle opened at 34,134 and ran all the way up to the zone at 34,175. Where it then consolidated a little bit, and then it continued right up to the target. Notice the step line crossed blue and climbing. As price consolidated here at the target, the step line crossed blue and climbing right there. That tells us price is going to attempt to pull back to the BBC. And it did. And it traded through it. And we had a new candle open. Opened at 145 and dropped to 071. So it's about $140 per contract traded in that one candle. Now, when this candle closed and this candle opened, it continued to the target. So you could have been short the open of this candle at 145, and it would have taken you down to the target almost 100 points. Is it 95 points? 100 points would be $500 per contract traded. In your mind's eye, you got to remember, okay, this was a red candle all the way down, and then it backed off a little. This candle opened, and price fell. right to the target, to the tick. And when the market finds support, it's going to go look for resistance. And it drove us up through the zone to the target. Then once we got above the target, we had a retracement. That's how price moves. Leg, retrace. Leg, retrace. Okay? So we get a pull back here to the step line in blue and climbing. And off we go to the zone overhead where the market finds resistance. Now remember, today's Thursday. These zones were given to our members and trial members Monday morning at 6:15 a.m. Eastern. So trading becomes not easy, but kind of simple when you know where to expect support, where to expect resistance. Now price just pulled back to the VBC, which we expect to be support, and it was. From 34,246, we've bounced all the way up to 34,290. Goal for the day, if you chose to trade that. So we had the short target, hit the long target, found support, basically at the zone, at the target, and resistance at the zone. The Russell. Okay, we opened right at a weekly zone. We dropped. We got just below the BBC. Okay. If you chose to short this candle, then you got stopped out. Once price closed back above the BBC, if you went long, this candle opened at 76.5. We'll call it 77 to be conservative. It went to the zone. That's what we expect. When we hit the zone, we had resistance, but price overcame the resistance, consolidated. Only three things happen at a zone. 70% of the time, it's going to be consolidation. 20% of the time, it's going to be rejection. Rejection means when the 30-minute candle closes, the only thing left touching the zone is the wick. Okay? Rejection. The third thing is what we call the slice. That's when the 30-minute candle slices through the zone like it's not even there. Now this candle had a high of 1880.7. The zone is 79.80. Once price slices through a zone and runs out of steam, it will typically retrace to the zone it sliced through, where it then consolidated, pulled back to the BBC, red and falling turned to blue and climbing, and that took us back up to the zone. And once we overcame the zone, we hit the target, and then some. Russell pays $50 a point, just like the ES. Crude oil. Market opened here. Price overcame red and falling. This candle opened at 69.35. It ran up to 69.56. Now, from 35 to 55, that's $200 per contract traded in that one green candle. Okay? And price pull back to the VBC. Price always reverts to the mean. Pull back holds because all these candles are touching. So even though we spiked it, it held. And where did it do? It sent us right up to the target. And then we traded above yesterday's high. Okay. So if you waited till this spot, to get in, to get long on this candle. 69.45, 55, 65, 70, $250 per contract traded. Then price pulls back to the BVC. Pullback holds more often than not. Even when it spikes it like this, see, both of these candles are still touching the BBC. So the pullback held. Now during the life of this candle, it didn't look like it was going to hold, but you can clearly see it did. And now price is attempting to move back up to the zone overhead. Remember, price is always trying to reach a weekly zone. If it's above the BBC, it's trying to get to the zone overhead. If it's below the BBC, it's trying to get to the zone below. Below the BBC, it's trying to get to the zone below, and the zone below. Then the pullback holds to the zone below. Does it always make it to the next zone below? Nope, not always. Then we start to head higher because we get above the BBC. So we hit this zone, we overcome the zone, we retrace to the BBC, and we hit the target. Then we pull back to the BBC and hit the target again. Then we find resistance at the zone. We get that pullback. Now we're just consolidating sideways at the target. Silver. Now, the alerts that went out last night were for the in contract. So, did price hit the long target? Yep. Did price hit the short target? Yep. Was there enough volume in the marketplace to actually take these trades on the end contract? Yes. But I'm now going to roll forward so that I don't forget tonight when I put out the alerts to roll forward, because my mind might be on something else. Now, as you can see, rolling to the U contract changes things, but it doesn't change the zones. Okay? Price consolidated for many hours. And when price is above the BBC and then below, and then above, and then below, and then above, and then below, those are not really good trading conditions. Okay? Now this swing high yesterday became this swing high, which became this swing high. Those who try to tell you that support and resistance is horse and buggy, you need to invest your money in some really expensive algorithms and indicators and oscillators and holy grail and all that nonsense. They're more interested in your money than you are. Keep your hand on your wallet and slowly back out of the room. It's just a little free advice. Okay? Again, these alerts were sent out last night at 6:15 p.m. Eastern. The CTAs. The logic alerts that we walked through all have a timestamp when they were issued. Okay? So what do we got left? The euro. Here's where we opened last night. Price is below blue and climbing, and when blue and climbing is directly above price, that means blue and climbing is about to turn into red and falling in most cases. That's exactly what happened. We dropped to the target and to the zone. Support, well, first resistance, then support. Resistance, then support. Then we actually traded through the zone. And if we look left, see this area right here? You should have been expecting support right there. Once you understand how price flows the same across all markets and all time frames, it shouldn't take you very long each day to get your goal. So not only is trading an opportunity to earn an above average income, it's also an opportunity to lose a whole lot of money if you don't have somebody to teach you how to do the job. But the other thing successful traders have is time. You see, money's a renewable resource. Time is not. So if you can get your goal for the day in a half hour, an hour, a couple hours, you've got all that time to pursue your passions, to pursue what God created you for, to spend time with your family, to travel, to see things, meet people, lead folks to Christ. Man, that's a win-win proposition. But the chance of it happening without someone to teach you how to do the job, well, the statistics speak for themselves. In 2006, Futures Magazine reported that 9 out of 10 new traders failed. They didn't say why, they just quoted a whole bunch of statistics. I, being inquisitive, wanted to know, why is there a 90% of brain surgeons don't wash out? 90% of Navy SEALs don't wash out. 90% of attorneys don't wash out. What the heck's going on here? Well, the answer was quite obvious. They had no one to teach them how to do the job. In fact, when this article came out, I put out a bounty on the internet publicly. Talked about it on this broadcast, posted it in all kinds of different places. Name your price and teach me how to trade. Guess how many takers? Not even one. Not even one. So Michael and I, we were forced to learn on our own. Took a lot of time, a lot of hours, a lot of late nights, and a lot of money. Good news is you don't have to go through all that. You can learn from our mistakes. I can't tell you how many times he and I went to bed thinking we had finally found the Holy Grail, only for the market to open the next morning and suddenly what we thought was a Holy Grail became diddly squat. There is no Holy Grail. The only Holy Grail is learning how to trade. And in order to learn how to trade, you can spend years and tens of thousands or hundreds of thousands of dollars trying to learn. Or, as I mentioned at the beginning of the broadcast, for $5,000, you can hire us to teach you. The choice is yours. We're transparent in pricing. We're transparent in everything we do. Everything we do is a part of historical record, available to the public. YouTube alone, over 2,200 daily episodes where we recap what happened in the live training room, where we recap what happened with every Logic 247 alert, every concierge trade alert. Lifetime members have lifetime access to every resource, from the room to unlimited one-on-one mentoring, a strategy and indicator set that is fluid across all markets and time frames, the Logic 247 alerts, the concierge trade alerts, and the members only workshop that will happen tonight at 8 p.m. Eastern. Now, if you're on the trial, you have access to every resource I just mentioned for 5 consecutive trading days, with the exception of the members only workshop on Thursday night. So if you've been on the trial, I'm sure you've received an email that explains to you how you can become a lifetime member. Or you can just go to eminifuturestrading.com, get your passport, and you'll be in the workshop tonight. If you have questions, call Valerie at 949-42-EMINI or send an email to support@cfrn.net. All this for life. No recurring fees, no upsells, no nonsense. Not ever. And I checked. That's a pretty good deal. Let's wrap it up with our good word for the day. Yesterday we talked about your position and your condition. Today, I want you to know that God is calling you. There was a movie. I want to think Beyonce was in it. I can't remember for sure. It might have been that movie, Oh Brother. But it's a Sunday morning church service where everybody's wearing their Sunday best. And a phone rings. And the preacher stops preaching and goes, "If that ain't Jesus, you better not answer." And whoever it was fumbled around and, silenced their phone and blah, blah. Movie trivia history. You're welcome. So, the next time your phone rings, don't expect to see Jesus on the caller ID. Although, with God, all things are possible. I'm talking about a different kind of calling. I'm talking about the reason God even created you. Do you think He created you just so you could take up space, breathe air, kick it with the boys? No. No. Romans 1:1. Paul, a bondservant of Jesus Christ, called to be an apostle. God reached into a part of Paul's background that had been formed before he became a Christian, and he found some very useful things there. And they weren't all spiritual things. They were also academic and cultural. Even though Paul seemed unqualified because of his monumental hatred for Christians, his background actually qualified him in a very unique way. As a former Pharisee, he understood the scriptures and the mindset of those who would oppose him. And his former spiritual blindness gave him compassion for the lost. God used both the good and the bad experiences in Paul's life. And my friend, He can do the same for you too. Think about it. When God looked for a man to be an early leader in His church, to write down the theology of His church, to debate religious leaders who argued against His church, to advance the cause of Christ in academic and social arenas, to carry the message all the way from the lowest person on the street to the throne of Caesar, God found a man who already had the necessary qualifications. And you guessed it, that man was Paul. Here's how God works. First, He seeks you out, then He prepares you, then He positions you, and then He empowers you to do what He knows you can do most effectively. And God's call is the only thing that will make you completely happy. Although you don't always know that in advance. So, is God calling you? Is He preparing you? Is He positioning you? Is He empowering you? Your highest level of joy and fulfillment will come when you surrender to Him and say one word: yes. That's our good word for today, but we'll continue with this topic tomorrow. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.